Welcome to our weekly Forex forecast, and today we are looking at the forecast for the week of September 16th to the 20th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. Okay, as usual, we'll start off by taking a look at our calendar here. So before we dive into the calendar, just wanted to make a quick note of something here. So over the weekend, we heard, was it today or this morning? Yes. So this morning, there was news that Saudi Arabia, Saudi Arabia was actually the oil supplies here. There were some oil strikes. Now, U.S. is claiming that this was Iranian drones that struck the Saudi oil there. However, there was actually, it was Yemen. There was somebody from Yemen who had taken the responsibility for it. However, the claims out of the U.S. were that they were from Iran, but Iran has denied the claims. But nonetheless, the situation that we have is that there will be disruption in the oil supply as a result of these attacks. So when the market opens today, we are likely to see oil being impacted as a result of that. So oil is likely to gap up as a result of it. Now, we don't know how much it will gap up, but we're likely to see that gap up, and it will take some time for that supply to kind of come back into the market. So we may see oil go up as a result of this. So keep an eye on that. So if oil goes up, we also generally see Canadian dollar, go up as a result of that. So we may see Canadian dollar crosses or Canadian dollar go up in the Canadian dollar crosses, which means dollar CAD is likely to be lower, CAD yen is likely to be higher, and Euro CAD, Pound CAD, those are likely to be lower as a result of these attacks. So any pair that has Canadian dollar in it will be impacted as a result of these oil strikes. And when this stuff happens, when the markets are closed, we likely see the result of that when the market opens up. As a result, there will be a gap in the market for these Canadian dollar crosses. Now, there was also an impact on the equity markets in Saudi Arabia and Dubai here. So we could see an impact on the equity markets, or at least to a certain extent, which may get filled later in the week, because we do, as we'll take a look here, just a moment in the news, there is the Fed announcement, FOMC, coming up this week. So we may see that market may go back to normal, equity markets may go back to normal as a result of that. So there's optimism around Fed cutting rates. Another quarter point interest rate cut from the Fed is being expected right now. And there's also, of course, the US-China trade optimism, because they're talking again, and they are kind of at least getting close to an interim agreement. And as a result of that, markets have been very optimistic. So the risk-on environment was created. So keep an eye on that, because we could see a little bit of a dip in that and markets may drop. Now, if the situation escalates, that will then likely impact the markets in a negative way, because then it can create a risk-off environment where the investors may get concerned. But in the short term, because the longer term they are optimistic about other things, this may not have a large impact on the equity markets, but it will have an impact on the oil and Canadian dollar. So that's something to keep in mind. All right, so let's take a look at what's coming out in terms of our news this week. So we do have monetary policy meeting minutes from Australia. So at this point, again, we'll just be looking to see what Reserve Bank of Australia is thinking in terms of future monetary policy, or if any changes are required. They were quite dovish. So if that stance has changed, then we're likely to see an impact on Australian dollar as a result of that. On Tuesday here, we have the economic sentiment, German economic sentiment here, but other than that, not a ton here in terms of high impact data. There's the current account. This one's usually important, especially with the trade war and all that. Right now, if the numbers are below expectations, we are likely to see a drop in New Zealand dollar. And then on Wednesday here, we have CPI inflation numbers for UK here. So there is a little bit of decline here, but if the numbers come below expectations here, that is likely to be negative for British pound. However, British pound has been very, very strong right now because of the Brexit stuff. So it appears that EU is likely going to grant another extension to UK in terms of the deadline. So the deadline was October 31st. It got pushed back to October 31st earlier in the year, and now looks like there may be another extension of the deadline. So that's why, and that is positive for British pound. So British pound has been very bullish, and of course there was there were questions about new election and all of that. So keep an eye on Brexit developments, but for now the previous Brexit developments were positive for British pound. But in an interview, I think there were comments made that Boris Johnson said that he's going to figure out a way to take UK out of EU on October 31st. Now, these were just comments, so I'm not expecting any reaction. However, if there are steps that get taken towards that, then there could be a reaction to that. But for now, pound is very bullish as a result of all the optimism. So this number, if it comes in line with expectations or close to expectations, it will be fine for British pound. But only time it will actually have an impact right now would be if it's considerably below expectations. Okay, and then we have a lot of data here on Wednesday, big day. We have CPI numbers, which is the inflation numbers for Canada here. So Bank of Canada has not cut rates, and if these numbers come in below expectations, it will have a negative impact on Canadian dollar. So keep that in mind. Oil inventories here. So with the attacks on Saudi oil there, this one here may not be as important, but if there is a drawdown and we have these attacks, that is likely to push the Canadian dollar even higher. So keep that in mind there. And then here's our FOMC. As I mentioned before, there is an expectation of a 1/4 point interest rate drop here. We did see comments from President Trump, or tweets from President Trump, where he called the Fed members boneheads for not cutting interest rates or not being aggressive about cutting interest rates, just like ECB kind of went into negative rates, and Fed hasn't been quite as aggressive about them. So right now we are only expecting a 1/4 point cut. However, if they do cut anything more than a 1/4 point, that will be negative for the US dollar, and it's likely to send equities even higher. So something to watch out here. And another thing we'll have to pay attention to would be the press conference as well as the Fed statement here, because in ECB statement, they laid out their plan that they're going to bring back the asset purchase program. And with the Fed, if they turn aggressive on other things, other parts of the monetary policy, we'll find out about that in the FOMC statement. And usually the press conference causes fluctuations in price as well. So it is important to pay attention to both of these events. So that's important there. And now, if for some reason they do not cut interest rates, that's likely to send US dollar higher and the equities lower. So we'll see how that goes. And then we have GDP numbers for New Zealand here. And if they're below expectations, that would be negative for New Zealand dollar. And again, we have employment numbers here for Australia here, and Australian dollar has done well. Actually, in the last couple of days, it did drop, but overall, it's not too bad. So the numbers here, we'll see how much. If they are considerably lower, then it will have a negative impact. Otherwise, it may not make too much of a difference. Okay, in addition to the FOMC, to the Fed, we also have Bank of Japan here. We have monetary policy statement from Bank of Japan, and then a press conference. So Japanese yen has dropped quite a bit in the last couple of weeks. Before, Bank of Japan was concerned about the strength in Japanese yen. But now that we are not seeing that strength, Bank of Japan may not have to do anything about the monetary policy. So they may just hold things as they are and just say that they're going to wait and watch how things happen before taking further action. So that may not make much of a difference. However, if they say something else or do make a change in their either in their rate, which is already negative here, or they introduce some sort of a stimulus, that would be negative for Japanese yen, which means yen crosses could go up further. But at this point, I'm just expecting a status quo from Bank of Japan. And then we have Swiss National Bank here. They are also already negative here, so not expecting an interest rate cut from them. But again, it will be the commentary and how they're expecting things to unfold, or what their stance is in terms of taking action, that can have that can make a difference. So pay attention to that. And then we have Bank of Japan here, Bank of England, my apologies, after the Bank of Japan here. So Bank of England here, not really expected to make any change. We are very close to the Brexit deadline at this point. There's already a lot of stuff going on in regards to that. So Bank of England, not expected to make any sort of changes right now. So I would not expect a major move as a result of that, unless they do say something about cutting interest rates. I'm not expecting that. So that's the sort of my baseline going into this. And then we also have Philly Fed manufacturing index numbers for the US here. So that can make a difference here. Right now, we are expecting a drop, but if it drops any further, that will show negative numbers, and again, further pressure on Fed to cut rates. Okay, and then ending the week off here with retail numbers here out of Canada. So we'll see how much the oil stays a focus this week. The oil situation may overtake the markets for the time being, for the short, for the near future here. So we'll see, and when there's something major going on that's not part of the day-to-day, that tends to move the market a little bit more, then the numbers can actually get lost in the whole overall scenario. So do expect that for Canada here, or Canadian dollar, but if the numbers come too far from expectations, that is likely to move the Canadian dollar. But otherwise, I think everything may be overshadowed by the Saudi oil strikes. All right, so let's move on to our charts now. As usual, we'll start off with our euro. So with the euro here, this was interesting because we did see that ECB dropped their deposit rate. They have added more stimulus. So President Trump actually praised ECB for taking action and called the Fed members boneheads for not doing the same. So in spite of that, what we saw as a result of all of that was that we did see euro drop as a result, but then it went back up quite rapidly. The move was quite rapid here. So big drop here, and then a big move up, very, very fast move up here as well. Just like the drop, it moved up pretty rapidly as well. So as a result of that, what we see right now is that price is still below the support resistance level here. So it's trading in a range still, hasn't broken out of that range. So looking at the daily chart, we see that price is into an important support resistance level where price was held above this level for quite some time. And then finally, it was able to move below this level. So what I would look for at this point would be to see how price reacts at this level. So when price moved into this level, we do see a pin bar here. So price went up and then came back right away. So as long as price holds below 1.1100, we are likely to see a further drop back towards the middle of the range or towards the lower part of the range. So I would expect price to trade in this range. Now, should it go through, so if price goes to retest the high once again and then manages to push through, then it could get stuck on the other side and it could just hold, it may just hold above and continue on. So watch out for that. And this is why the 1.1100 level is so important, because as long as it stays below, it is likely to get stuck below and get pushed further to the downside. But as soon as it starts or as soon as it gets through to the other side, then we will likely see continuation on the other side. So these are the two levels here. And currently, I would look for a move back into this area, back into this range. But on a weekly basis, this is a strong weekly bullish candle. So we are into resistance, which causes a problem. But as soon as it goes through, we are looking for it to continue further. So my bias is bullish, but with caution. As soon as we see price cross to the other side and hold, then this will turn bullish. And 1.1260 would be the next level to watch out for. And then it could go all the way into 1.1400. So we'll have to keep an eye on this level. So for now, I'm bullish, but with caution. Pound dollar here, this one went up quite a bit in the last 2 weeks here. So last week we had a bullish candle here. So we got that bullish move. This week here, very, very bullish candle. So we could get a further move to the upside. Bias is bullish here. And first target is 1.2600. Second target, 1.2780. So bullish bias here. With this one as well, though, we are into support resistance. So this is where we are, right into the support resistance level here. So if price does not get through, then we are likely to see it come back down. But right now, this one looks more bullish than Euro does. So bias is bullish. 1.2600 first target, 1.2780 is the second target for pound dollar. Aussie dollar, this is also looking bullish here. We are getting close to a resistance level, so watch out for 6920, but bias is bullish. Next target 0.6920 and then 0.7060. So Aussie dollar is bullish as well. New Zealand dollar, this one has been struggling here. So this is what I was talking about with euro. Price in New Zealand dollar here is into resistance, but same, excuse me, same way we saw in euro, price is into resistance here. So what can happen is, even if the candle is strongly bullish, it can turn around, as we saw happen in New Zealand dollar. So right now, bias is bearish for New Zealand dollar, and we could see price drop here. Now, with the oil situation, Canadian dollar is likely to go higher. And when Canadian dollar gets pushed higher, a lot of times Australian dollar, New Zealand dollar tend to follow suit as well. So in this case, we could see New Zealand dollar turn around. So do keep an eye on that. But just purely based on technicals, this is bearish. So as long as price stays below 0.6450, we could see a drop in this, and target is 0.6280. So bias here is bearish for New Zealand dollar. Dollar CAD here. This one is looking bullish, like I said, and bias is bullish. First target is 1.3350. Second target 1.3430, and then this one could go higher as well. So bullish bias for now for Canadian dollar, dollar CAD, sorry. Yeah, so sorry, I just had to think there for a second. And if the Canadian dollar actually, so bias here is bullish, but if the Canadian dollar here drops, Canadian dollar strengthens, we're likely to see dollar CAD drop here. So that's something that we should mark here as well, because we are likely to see dollar CAD drop because of the oil situation. So as much as, even though this one is looking bullish on the charts, we could see a reversal here actually. Even on the open here, we could just see price drop right from here towards 1.3140 and then 1.3020. So keep an eye on that. Dollar CAD is likely to drop as a result of Canadian dollar strengthening. So this one, we are likely to see a reversal. So I will look for a price to move down towards, so my bias here, I'm actually going to change it to bearish here based on the oil situation here. So 1.3140 will be the first target. 1.3020 will be the second target here for oil, for dollar CAD, sorry, because of oil. Euro pound here, looking quite bearish here. Last week we were bearish on this, nice pullback and drop, so bias is still bearish. It's gotten through the support resistance level here now. So I will look for a bit of a pullback into 0.8890 and then a further drop. And in terms of our target here, we are looking at 0.8800 and then we have 0.8720. So bias here is bearish. And in terms of pullback, we could get a pullback into 0.8880 and then looking for a drop here. So bearish bias for euro pound. Euro Swiss franc, this is looking bullish here. We are into resistance, so just be mindful of that. But bias is bullish and likely to see a further move to the upside, looking at 1.1050 as the target here. So bias is bullish for Euro Swiss franc. Pound Swiss franc, this is looking very bullish here, very, very strong candle. So bias is bullish. Next target is 1.2500. And then we have the next target after that would be 1.2650. So bias is bullish. Potential pullback into 1.2300 and then a further move to the upside. So something like this, a pullback and then a further move higher. So bias is bullish here for pound Swiss franc. Now, just a quick note in this regard here. If the oil strikes, that situation escalates, now that could come into the market and change things, because if investors get worried, like we talked about before, that could have a negative impact on the equities and positive impact on Swiss franc, as well as our Japanese yen and silver, gold, these things. So these are all safe haven assets. So should market get worried about the oil strikes, I will look out for a reversal in these things or pullbacks and stuff, which means this forecast could turn around based on those things. But right now, because of the market optimism, I think we could see things go up higher here. So for now, bias is bullish. Dollar Swiss franc here, not doing that well. We do see price into resistance here. It has gone up, but it's getting stuck, excuse me, at the high here. So I would look for price to potentially do a retest. And if it doesn't go through, we could see price drop again. towards 0.9800. So for now, bias is neutral here and is likely to turn bearish if it stays below 0.9950. So neutral bias for dollar Swiss franc for now. Pound yen, extremely bullish here. So next target is 136.50. I was looking for it to have a reaction at this point here at the top, but it just continued on, which shows that there is very, very strong optimism in the market right now for British pound here. So as a result of that here, we have a big bullish candle close. So bias is bullish, and that's the type of move we could see. So in terms of the pullback here, I would look for 134.50 or slightly lower into 134. So bias is bullish here for the yen, for pound yen, I mean. And this is what I would look for, a bit of a pullback, either into 134 or 134.50, and then a further move higher into 138.50. So bullish bias for pound yen. Euro yen looking strong here as well. It is into support resistance at the moment, right where it is, but bias is bullish here. It is looking strong. Now, it could drop a bit. However, I would be careful with this one. If the yen crosses continue, other yen crosses continue up higher, this is likely to go higher as well. In that case, so we have next target as 120.50 and then 121.50. So bias is bullish for euro yen as well. Dollar yen is looking quite bullish here as well. Now, we are into support resistance. So keep that in mind, because things can turn around when price is into resistance, but this one's looking bullish as well. And again, looking for price to move higher here. We could get a bit of a pullback into 107.50 and then a further move higher. So 108.80 is the first target, and then 109.30 will be the second target here. So bias is bullish for dollar yen. Aussie yen looking extremely bullish here as well. So next target would be 74.80, 75.20, and then all the way into 76.30. So with this one here, I would look for a bit of a pullback again into 73.80, and then a further move higher here. So bullish bias for Aussie yen as well. New Zealand yen, not as strong because of the New Zealand dollar here. So we have a pin bar here as well. So right now, the bias is neutral. Normally, I would just expect this one to turn, but the problem is we have to see what happens to our commodity currencies. So if New Zealand dollar starts to go back up, New Zealand yen is likely to go back up as well. So at this point, I'm neutral on this. I would wait and see how things play out here. And normally, I would look for a retest of the high. And if price stays below 69.65 here, I would look for it to drop. So I'm still going to do that. I will look to see how price reacts at 69.65. If it stays below, then I will look for a drop. But should it go through here, next target is 70.40, and above that 71.50. So a neutral bias here, but should it break through the high, I would look for a continuation. CAD yen here, this one went down on Friday, and hence we have this pin again on this one as well. But with Canadian dollar pushing higher, Canadian CAD yen here could go higher as well, or is likely to go higher. And then we'll see price go up for this. So as a result, I will look at what happens when price goes into the high. So if we when the market opens up, if we see a gap up and price is testing the high here, then I would like to wait and watch and see what happens at this level. If price holds below 82, then we could see it drop. But should it cross above 82 and holds above, then I'm looking for it to go higher. And in that case, we are likely to see price continue on higher. So 83 is the first target, and then 83.20, and then potentially all the way into 84.20. But again, this level here, 82, will be very important. Okay, so that's our yen, that's for the yen crosses. So let's take a look at our silver here. Big drop in silver, a lot of optimism in the markets here, in the equity markets. So everybody is excited about Fed cuts and all the other fun stuff with US and China. So investors are celebrating. And as such, our safe haven assets have dropped. So with this one, biases to the downside based on our technical stuff here. So keep an eye on the oil situation. Again, if it escalates, it could go into the equity markets as well. But at this point, there is a lot of optimism, which means it may not. It may just be a blip and then go back to being more optimistic once again. And as such, we are then likely to see a further drop here for silver, and 17.18, then 16.80 would be the two targets to the downside. So bias is bearish here for silver. Gold as well, we have seen that price has been holding here. Bearish bias here based on our candle close here. We saw a drop last week for gold as well. So bias is still bearish. We could get a pullback here and then a drop. First target is 1480, then 1470 will be the second target. And if Fed cuts rates, then we could see a drop further here as well. 1450 is the third target there. So bias is bearish for gold. Oil here, oil is going to turn around here based on what we saw come out. So we did have a bearish candle close, but I would look for price to go into 58.80 and then potentially higher into 61, and then it could go higher even. So keep an eye on that, 63.80. So essentially, I would look for price to gap up, and bias is bullish here in spite of the bearish candle here because of the Saudi attacks. So bullish bias here for oil, 61, then 63.80 are the two targets. Copper looking quite bullish here, so bias is bullish. First target 6.68, so my apologies, 2.68, and then next one here, 2.73 will be the second target here. So bias is bullish. Again, we could get a bit of a pullback here, and then a further move higher. So bullish bias for copper as well. Bitcoin here. I do not have the current latest weekend price here, but based on what we have here, this is just trading sideways at the moment. So I'm expecting it to be range bound. So price has just been going back and forth between these two levels here. So we have 10,800, and then to the downside, we have 9,280 levels. So I'm just expecting the price to basically just go back and forth between the two. Not expecting anything huge at the moment. But again, we have to keep an eye on the edges here, on the boundaries of the range. If price tries to go through the either side, that will be the new market direction. For now, bias is neutral. S&P 500 here, we have a big push higher here. So bias is bullish. Now, not taking into account any impact from the oil here or market weakness that could happen as a result of escalations, not considering that. Bias is bullish. 3080 would be the next target to the upside here. So S&P is bullish bias here. NASDAQ here, this one, we did have a drop on Friday, but bias is still bullish for this one. And the next target would be 8020. And then we're looking at 81 actually. So bias is bullish for NASDAQ. Now we do have an indecision candle here. So with this one, what could happen is if we see price go into the high, then it can drop from there. So take that into account. So we could see price go into the high and then drop. And yeah. So change course there. So actually, I'm going to change the bias here to neutral, just because I think that's a better reflection of our candlestick here. So neutral bias, but I will look for a push into 8020 and then potential drop from there. DAX here, DAX is looking bullish as well. Strong bullish move here. Bias is bullish. Next target is 12,650. And then 12,800. So bullish bias here for DAX. FTSE here going sideways here, hasn't, we have gone down, saw price go back up. Now we do have a bit of a neutral bias here. Again, pins on both sides, but this one has made higher highs here. So we could see a continuation. We're just seeing price into resistance at this moment. So it could go higher. Keep an eye on that. 74.50 would be the next target higher should it break through this level here, and then 75.20. So for now, this one is neutral to bullish bias here for FTSE. Nikkei looking very, very strong here for last couple of weeks. So bias is bullish. Next target is 22,500. So bullish bias for Nikkei here. All right, so we'll wrap it up here. Any questions before we wrap things up? Oh, in terms of the downloads, if you would like to download the spreadsheet with the different levels here, you can go to tradingwithvenus.com/forecast, and that will bring you to the link where you can download the spreadsheet from. If you have already signed up once, you don't need to sign up again because you will receive it in your email from me. All right, so that's it for now. Guys, enjoy the rest of your weekend, and I will see you again next week. Bye for now.